Hello and welcome everyone to the Week Ahead Commodity Report, where we of course will be reviewing the markets for the week ahead. After an explosive start to the year, commodity prices, they pull back this month as traders exited profitable positions to then offset losses in other asset classes such as equities and cryptocurrencies, triggered by a hawkish shift in central bank policy. Earlier this month, the Federal Reserve, they wrapped up their highly anticipated May meeting with a 50 basis point increase. That's the biggest and most aggressive interest rate hike in 22 years in what can only be described as a belated response to the fastest rise in inflation seen in over 41 years. The Federal Reserve, which finds itself caught between a rock and a hard place, got even more bad news last week with April's consumer price inflation data showing the biggest core increase since 1982. The Fed is now caught in a box of its own making because it didn't move quick enough on raising rates last year. Now the Fed has to be seen to be more aggressive, which ultimately means stagflation is now a major risk to the economy, or worse still, a recession. Historically, the Federal Reserve, they've never been right on monetary policy, and they have a proven track record of setting the economy up for an even bigger crisis. Only time will tell if the Fed is right or on the verge of yet another major policy error. However, one thing we do know for sure is that equity and cryptocurrency markets, they tend to get crushed once the Fed begins raising interest rates. The S&P 500, it's now down 22% year to date. The Nasdaq is faring even worse, plummeting over 29% this year, whilst many cryptocurrencies, they're now down over 90% from the recent highs. This inversely presents huge bullish tailwinds for the entire commodity sector, ranging from the metals to the energies to soft commodities, as they are viewed as one of the most reliable hedges against economic risk, inflation and recession. Historically, each time commodities have posted an exceptional first quarter performance, they've always gone on to finish the year trading at fresh record highs. As we transition through the second quarter of 2022, the price action across the entire commodities complex, that continues to resemble the identical trend last seen during the second quarter of 2020 and 2021 when the commodity supercycle was getting started. Every pullback we saw back in the second quarter of 2020 and 2021, that formed a launchpad for commodity prices to skyrocket and hit fresh multi-year and all-time record highs ahead. And that's the exact trend we're seeing play out again right now. Looking ahead, more big moves could be on the horizon, with inflation continuing to take center stage and heightened concerns that the Fed won't be able to deliver a soft economic landing. Next week, traders will continue to look for clues on the central bank's interest rate hiking plans in both economic reports and comments from the Federal Reserve. Fed Chair Jerome Powell will speak on Tuesday and is expected to confirm expectations the Fed will stick with a half-a-point interest rate hike in June, July and possibly September. Elsewhere, key US economic data, including retail and home sales, that's expected to show the economy slowed down with manufacturing activity and the housing market cooling, whilst consumers are still faced with widespread price increases due to unstoppable inflation. Extraordinary times, they create extraordinary opportunities. Right now, these markets, they're a trader's paradise. As we know, commodity markets, they don't move up in a straight line, they zigzag. That presents savvy traders with an incredible flow of back-to-back lucrative trading opportunities to generate huge profits fast. To quote Goldman Sachs, we're still only at the first innings of a multi-year, potentially decade-long commodity supercycle. It goes without saying that commodities are definitely one of the most lucrative and exciting asset classes, and they are a must-have in every portfolio. Banks, hedge funds, they're making multi-billions capitalizing on the week-to-week opportunities across the commodity supercycle, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, have already made in excess of 6 and 7 figures so far this year, and we're only 5 months into the year. Here are just some of the testimonials which have been flooding in from our clients over this year, sharing their successes and achievements. Whichever way you look at it, the case for commodities in a well-diversified portfolio has never been more obvious than it is right now. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we go into next week. So first of all, moving over to energies, as we discussed with you last week, gasoline prices, our expectation was that we were going to break out to all-time highs here. We already saw over a 15% move in the last week. The previous week to that, natural gas prices, they broke out 20% in 1 week, tripling price over 2022. So you can see here where gasoline prices on Friday broke above the swing highs. This 3-day impulse move to the upside, that put gasoline prices back at their all-time highs into Friday's close. So not only that, we of course saw that have a knock-on effect on WTI crude oil and also Brent crude oil. So we took the opportunity with our clients at the Gold and Silver Club to lock in 1,600 points on one of our crude oil positions. We still maintain 3 positions on the energies though, which are significantly in profit into Friday's close. So with WTI crude oil here, we are on track now for a breach back towards the 1-month highs. I'm of course looking for a potential breakout above the 111 and 112 zone here, taking the price back towards the recent swing highs that were tested in the middle of March. And of course the ideal scenario here would be to replicate the move that we've just seen on gasoline and essentially get a break back out towards the swing highs here that were tested back at the beginning of March, which takes the price up to the 14-year highs. Now of course we're in from much lower prices. We talked you through this many times. The buy opportunity in our view with crude oil is sub $100 per barrel. That is where we've been snipering in, accumulating positions. We have 3 positions on the energies right now. That also includes Brent crude oil, where we have 2 positions on. Those trades up over 2,000 points into Friday's close, which looks again solid here. I want to see whether we'll get as well further follow through like we've seen on gasoline, on heating oil and WTI crude oil, whether we get a break above the swing highs going into next week, enabling us to start scaling out of profit, bank into strength if we do get a breakout back towards the 2-month highs, then ultimately back towards the swing highs that were tested back in March here as well. Now again, going back to Brent crude oil, same situation as we discussed with you with WTI crude oil. I perceive at the moment every dip back below $100 per barrel as a great opportunity to accumulate, and that's exactly what we've done. Each time we've dipped back below $100 per barrel, this is where we built out our position. Now platinum last week, we got pretty lucky on this, very precise on banking the profits here with our clients at the Gold and Silver Club. So we banked platinum at $990 per ounce last week. We raised the amount banked with this position. We still have a little bit of running exposure, which is protected, but we took the opportunity on the breakout back towards the weekly and monthly highs here to just scale out a bit more profit. That actually happened to be the exact turning point of platinum there later on in the week, and you can see it's rolled back over back towards the swing lows, trading back at $929 per ounce into the close. But this goes back to exactly what we discussed with you last week. You want to be very nimble at the moment, regularly locking in your profits. This enables you, after you bank those profits, to then reload and get in at much lower prices, and that has worked time and time again throughout these cycles. Now 2 other markets which of course you want to have on your radar as you go into next week. Number 1, that is gold, which is now trading at $1,811 per ounce. So we're basically gold here. It's come back to the levels that gold was trading at before we had the Ukraine and Russia invasion, where we've seen that breakout to the upside. You can see here where we broke out all the way just within $5 of the all-time highs here. We're now trading back at liquidity, back at the 1800 zone. What I'm very curious to see as we go into next week is whether gold is going to hold onto this 1800 level, or whether we need to see a max pain situation here for the gold bugs in the market and squeeze back down and retest the 1780 or 1750 zone. I certainly can't rule that out. In the short term, gold does need to reclaim and break and close back above the 1825 zone, reclaim back above 1850. Then you could suggest it's building a base and it's getting ready for a V-shaped recovery to the upside. But at the moment, there's still some vulnerability to this market. It is the same for silver at the moment as well. So silver breached back below $21 per ounce here on Friday. We did get some reversal into Friday's close, but it's not enough yet to confirm that this is a full-on reversal which is going to see the low put in. I would keep a very close eye on the metals as we go into next week. We've continued to take advantage, for example, on the breakouts that we saw last week, scaling out of positions on energies and platinum here on these spikes higher to the upside. What I'm very curious to see next week is whether we're going to start seeing any sort of pressure on the dollar here after we broke out to the 105 zone, which we hit on Friday. We started to pull back a little bit. Obviously, the dollar starting to pull back further would help gold, silver, and other commodities priced against the dollar. However, the main play that we're looking to capitalize on right now in the very short term is energies. This is where we have a lot of exposure, and currently as well, hedge funds and money managers, their overall strongest position right now is in the energy markets. We want to capitalize on that, certainly as we go into next week, especially given that we've already seen that breakout to all-time highs on Friday with gasoline, and we continue to maintain our position on the energies here, looking to scale out as we see these breakouts to the upside to capitalize on. And there's going to be plenty more more opportunities to sniper in at low prices here on other commodities such as the precious metals as we go throughout the month of May and head into June, which tends to be a very favorable time of year for the metals. But of course, you want to get your timing right. Commodities, they don't move up in a straight line, they zigzag. This is where you want to capitalize on the right time of those cycles to sniper in and accumulate. As we enter a new economic climate, the importance of having an essential income generating skill like trading has become a must-have necessity. If you want to actually reach your long-term financial goals in these rapidly changing markets, then you can't just stockpile cash in a savings account, because rapidly surging inflation, that will erode your wealth and purchasing power. Instead, you need to make your money work as hard for you as you've worked hard for it. With that said, there's no surprise that commodities have firmly positioned themselves as one of the most exciting and liquid asset classes, which continue to present savvy traders with unlimited opportunities to generate huge profits fast. Extraordinary times, they do create extraordinary opportunities, and right now these markets are a trader's paradise. Banks, hedge funds, they're making multi-billions capitalizing on the supercycle, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, they've already made in excess of 6 and 7 figures so far this year, and we still have another 7 months left to go. If you've been kicking yourself for missing out on some of the biggest trading opportunities so far this year, and you still want to make 2022 your best year yet, then you still have time if you take action now. We are seeing one of the greatest wealth transfers ever in history. The time to start making money in this commodity supercycle, that is right now. One of the biggest obstacles that holds 95% of retail traders back from achieving their desired success, it's not having access to professional strategies and institutional level data and market intelligence to make confident decisions with accuracy in these highly profitable markets. If you follow the wrong strategy, or worse still, if you lack access to the right data at the right time, you will end up wasting lots of time, money and effort and have no results to show for all of your hard work. If you want to thrive and not just survive in these highly macro-driven markets, then you need to adapt and utilize a professional, research-driven approach. Having access to the right data at the right time, it is the single greatest difference between ordinary and extraordinary results. Trading like every other misguided retail trader out there, utilizing outdated technical analysis or gimmicky technical indicators, that will not work. As traders, we have a superior advantage to capitalize on every highly lucrative move fast, no matter if the market is trade up, down or sideways. You need to know exactly when to buy, when to sell, but also more importantly, which asset class to focus on and when. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with superior levels of precision, confidence and profitability. We still have another 7 months left to go of this year. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. You can always give people the right skills, knowledge and strategies to transform their financial future. One thing you can't give them back is the time they have lost. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want us to help you achieve the same level of wealth and success as our clients at the Gold and Silver Club, then there is an opportunity for you to join our professional mentorship program. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, institutional research and market intelligence, access to our private Members Academy website, and support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP.